Millions left cities in 2020 during pandemic shutdowns, heading for the suburbs and beyond.
The nation. But as Money Watch reporter Amy Peakey explains, the value of real estate is soaring faster than people's incomes in many parts of the country. As a result, monthly mortgage payments have now become increasingly unaffordable.
Home prices surging another 16% in 2022 due to mismatched supply and demand. Let's bring in.
You said some of the signs. We're seeing inventory rise month over month for the last 4 months. We're seeing home price appreciation cool down a little bit.
And existing home sales are now on track to pass 6 million this year. That would mark the strongest annual rate in 15 years.
I think that if you don't have to buy right now and you're the incremental primary buyer, I suggest waiting. I think you'll get a better price to buy.
Call me crazy, but I think that sounds like the wrong way to go.
Is this the best time to buy right now? Will the market crash? I hate paying for someone else's mortgage. I want to buy my own home. Should I sell my home? If you thought about any of these questions recently, you're not alone. Right now we're going through a major shift in real estate, and to be honest, no matter who you ask, we don't know. What's up, guys? My name is Jacques. Thanks for tuning in. On this channel, Wealth on Replay, I'll be teaching you guys different wealth tips and strategies to increase your net worth. Now today, I'm going to be giving you guys my thoughts on the current real estate market. Unless you've been living under a rock, home prices are at an all-time high and rent prices are soaring as well. And as a professional in this industry, we get these questions a lot. And as I alluded to earlier, we don't know if the market is going to crash, but what I can tell you is what's been reported so far. Now, according to a CNBC article, the feds are thinking about raising the interest if the inflation continues. In that same article, it does say that the Federal Reserve officials had a meeting earlier that month, and they were concerned about inflation, and they were willing to raise interest rates if the prices kept rising. Now, by raising the interest rate, that actually might cool down the market a little bit. A lot of people that I know are waiting for the real estate market to cool off. There might not be a crash like what happened back in 2008, but definitely the prices are slowing down. Things are going to cool down quite a bit. And trust me, guys, we're waiting for the market to cool down just like how you are. Now, if you are one of the ones that are waiting for the market to crash or even to cool down, so first, is your credit where it needs to be? Your credit score is one of the main factors in when buying a home, especially if you want to get a low interest rate. In the description box below, what I'm going to do is put a link for my free ebook. So go ahead and download that free ebook and make sure that you dispute any inaccurate items on your credit report. You want to go ahead and get that done now before the market cools off, so that way you're ready. You don't want to wait last minute, because if you do, then you're going to be competing against other people that already downloaded my book and or started on their own credit repair, and they're going to be ready and you won't be. Next, if you're ready for the market to correct itself or crash, do you have enough money saved currently right now? And what I mean by that is, do you have enough money for your down payment, which is typically 3.5% for a first-time home buyer, or sometimes more if you're going to get an investment property? Do you have money for closing costs, for your title company fees, insurance, taxes, appraisal, inspection, just to name a few? You're not always going to find someone to pay for your closing costs. These are your costs that you incur when purchasing a home. You want to make sure that you're financially ready to go ahead and get those items paid for to get that transaction closed. And another thing that a lot of people don't really talk about if the market were to slow down is this factor right here. Now, let's pretend there's a home for $400,000 and there's 5 potential buyers to buy that home. Now, if you're one of those lucky 5 people, you only have 4 other people to compete with. Now, let's pretend the market slowed down and that $400,000 home is now $300,000. Now that $300,000 home is now accessible to 15 people. You're not going to have to compete against 14 other people. And what's going to happen is you're going to go into what's called a bidding war. Now, with the bidding war, it's just the same as if it's in a seller's market. The best offer is going to win. You're going to have to put a higher price offer to catch the seller's attention if you want to get that home. So definitely think of these things before saying that you want the market to slow down or correct itself if you're not ready for these issues. And I know what you're going to say. Right now, homeowners are getting a lot of equity into their homes. And you're right. They're getting equity at a fast pace, at record-breaking speed. But what they're not telling you is the increase of cost that's happening because of the downside of this economy right now. And yes, rent across the board has increased about 30% across the states, which is astounding. And that's mainly due to the fact of the higher taxes and insurance that the landlord has to pay. I'm going to show you guys a picture that's been circling around social media, that's been catching a lot of people's attention. It's been getting a lot of people mad at landlords across the US. Now, if you look here, Mrs. Train has a current rent of $850. And looks like on December 1st, she's going to be paying about $1,800, which is almost $1,000 increase. Now, I know a lot of people are angry at the landlords. Why are they raising up the price? I just want you to look at it from a different perspective. Now, let me give you guys a quick scenario. Let's pretend you're working in a restaurant and everybody's getting a $5 raise because of the food increase across the board on all the restaurant chains, because everyone is raising the food prices up by 30% to pay the workers. Now, are you going to be the only one that says no to the raise because you don't want to increase the prices on the food? Or are you going to conform with the market price and take the raise? It's the same thing in real estate, guys. Think about it. If you're a landlord and you put your hard-earned money, sweat, and tears into a home, and you're realizing somebody else across the street is getting $1,800 for the same rental property, you're only getting $850, would you lose on about $1,000 a month in residual income when the reason for you getting that investment property is to get profit? Think about it. You probably would increase that rent as well, so make sure you have more money in your pocket. Now, okay, what if the landlord really does want to keep the rent at $850 and they're comfortable? What happens if the insurance and taxes on the home goes up? What if they have no choice to increase the rent on the tenant? This is happening across the board. A lot of people are being stuck. Remember, guys, landlords still have a mortgage to pay. And the difference between their mortgage and what you pay is their profit. Sometimes their profit is only a few bucks. Sometimes it could be hundreds of dollars. Either way, the landlord still wants to make profit for their investment. So just think about those things when you are looking at these rent prices increasing. Sometimes it's not the landlord, it's just the overall market in general. Now, I'm in Florida, but this is a nationwide issue, and I feel like this should be addressed. What do you think? Do you think there should be a cap on the rent prices? I would love to know your answers in the comment section below. And I know a lot of people won't agree with this, but me personally, I would rather have a higher interest rate and pay for less of a home. For example, I would love to buy a home for $80,000 and give me a 12% interest rate, because I know I can pay that $80,000 off a lot quicker, opposed to having that same home for $300,000 and getting only a 1% interest rate. I can actually put more money down into the equity a lot quicker and knock it down. Again, that's just me. A lot of people don't think that way. I would rather pay for a cheaper home, because a cheaper home would also give me less taxes, a lower homeowner's insurance, and the overall payment normally is typically a lot lower. Higher home prices increases the other variables in the mortgage, as I stated before, the payment, interest, taxes, and insurance. So if the home prices goes up, that tax and insurance also goes up. So again, that's just me. A lot of people don't think that way, but I'd rather the interest rates go up, home prices go down, so that way taxes and insurance go down. And remember, guys, you want to buy real estate and wait, not wait to buy real estate. Now, one last thing that you need to know that's very important, that's going to help you get pre-approved, especially in this market. Now, after you like this video and subscribe to the channel if you haven't done so already, click on this video to find out.